All right, great. Well, welcome to our February meeting of the Mountain Community Capital Fund. I am pulling up our agenda here. I'm subbing in for Carl Alguire, who is our chair. He couldn't be here today. So we're gonna roll with this, and I probably won't get the script right, but very excited to have folks here today joining us. We're having this specially scheduled meeting, so that way we can get back on track with our calendar. So we'll vote on that today. Charlie, do I need to say anything else in terms of opening the meeting for the public comment? Okay, great. So we'll have everyone go around. We'll start with John. You want to introduce yourself?
Hey, John Appleby, Asheville City appointee, a voting member.
Great. Frank?
Frank McGowan, City of Asheville Finance Department, voting member.
Mason?
Mason Scott, Buncombe County staff, voting member.
Thank you. Lucia?
Lucius Wilson, Mountain BizWorks, non-voting member.
Great. Charlie? Great. Kelly?
Kelly Holster, Mountain BizWorks, non-voting.
Great. Christopher? Oh, and we can't hear you. You're muted.
Christopher Murray, Mountain BizWorks, non-voting member.
Great. And I've got Karen.
Karen Omansky, self-help, non-voting member. My camera doesn't
Great.
seem to be working, but okay.
Now it is.
Great. And I've got, let's see, Vanessa. Vanessa, can you hear us? All right, well, we'll come back around. Is there anyone else on the call that I've missed? All right, well, we've got a handful of us in person. Got some cross signals here, so we'll go around this room. Dee, if you'd like to start.
Hi there, I'm Dee Williams. I am an appointee of Buncombe County and I'm a voting member.
Evie Osakaw, Buncombe County staff, voting member. Stacia Cheney, AmeriCorps fellow, non-voting member.
And I'm Rachel Taylor, City of Asheville, voting member. Well, great. So we'll go ahead and get kicked off here. Oh, great. Thanks, Vanessa. I'm sorry for the tech issues. Welcome. Great. So we've got Vanessa joining us from Carolina Small Business Development Fund. Cool. All right. So we'll get started here. Has everyone had a chance to review the agenda and review the minutes from the last meeting? Any questions, comments, concerns?
No.
Okay, can I get a motion to approve the minutes?
Motion to approve.
Second,
I'll second.
Right? All in favor? Aye.
Hi.
Okay. Any opposed? All right, minutes are approved. And so we'll get started with our reports and updates. With that, I will pass it over to Kelly to talk about our reporting and data overview. Kelly, do you need me to share the screen there? Is that helpful?
Well, either or, I was going to, but if y'all can see
Oh,
it.
great.
Yeah, because I want to
Great.
talk between the tabs. Okay, can everyone see this okay? Don't need it a little bigger, okay. Excuse me, okay, so we've been talking for a few months about the reporting system, and I think it was last month and the month before I had given a rough draft of a new layout template to help the information be a little bit more clear and easy to understand. And so we're still in that process. John has been kind enough to meet with me, and we've talked over some different layouts and additional information. So hopefully it will be a little more clearer. But I want to kind of go out over the layout first. So this is in the spreadsheet form. We usually send out the spreadsheet, but we always send out a PDF version of the fund overview, which is seen on the screen right now. So that's the format that you're used to seeing. And so that information, just so everybody understands, is pulled from an internal database. It comes directly from our system, which is this screen right here, which we always include in the reports, and we will continue to include these in the reports. And this is where all the data is pulled from, and it's got the different columns in here, the count number and then the status. But of course, it's hard to look at this and really get a good feed for the portfolio. And so we've come out with a new layout here. And to explain the objective of the new layout is we wanted to be able to pull the information, give the same data, but give it in a way that is able for the committee, for anyone to look at it and gauge what areas the portfolio is performing in and what areas it is not in, how things impact the certain trigger points. And so I'll start at the top and go down, but if anyone has questions, or John or Christopher, if you want to chime in, feel free to chime in as I go through this. So as usual at the top, we're still going to have the same cutoff date as the previous month. And so, just like we discussed, this is the cutoff as of the end of the year, 12/31. We're on February 6th now, so we don't have the numbers yet for January 31st. So we're still going to be running roughly 30 days in the reporting flow. And so just at the top, we've laid out a little bit differently. And what I've included is the previous month. So at the end of November on the previous report, we were at 77 loans, and I put the original amounts up here, included more things like the original loan amount, the original guarantee amount, and then what the active loan amount was. So it kind of gives you a read for what happened last month. And then on the next line, we put in here the number of loans that were booked during the month that we're reporting. So this would be the number of loans that was booked during the month of December, and that was 3 loans at a total origination amount of 150,000. And then that brings us to the total loan count of 80. What that means is that's the total loan account since the inception of the program. Doesn't mean it's outstanding, it's just what we've done here. And then we put the next few lines in here as a gauge to look what happened with the portfolio. So we started with 77 last month. We did 3, 80 at the total since inception. Since the inception, we've had 4 loans that have repaid us in full, which means those were successful in the origination amount. You got the year at 129,000, the original guarantee amount, and we've included the jobs created over here. And we've also included the new money amount there. Someone had asked, what does the new money amount mean? And so I wanted to explain that. The reason that we provide that is that shows how many new dollars are coming out of the fund. So if you have a trend where you're not giving new money, then what we're doing is reloaning money out of a loan, which is typically refinancing an account there. So you want to see the new money going up and not, staying stagnant. So it shows we're putting more dollars into the community, into the small businesses. And so the success is for successfully repaid. There's been questions to again show the dollars refinanced. So we've listed this, which comes out to 14 loans, origination amount of 481 and 50 loans with that. Claims paid today. We want to make that very clear, but which is 12. And over here on the final column, you've got the amounts 285 and there may be a typo there. I do want to clarify, this template right here, the one I'm showing you right now, is not pulling from the actual MCC loan data. And the reason I want to make that clear today is this is a rough draft. So there is a chance you're going to see some errors, small errors in this. The plan is once the committee agrees on the new template, then we'll take this back internally, turn it over to IT internally to have them fix it where everything is pulling over. So everything that's been done on this template right here, I've had to physically manually pull it over here, which has been time consuming, which I don't mind, but there is room for human error there. So I just want to make sure that I address that. So the claims paid today is been 12 at 295,000, which brings us to the question of the total active loans in the portfolio, which is 50 loans at this point as at the end of December, which the original loan amount is 2.1. What I want to draw the attention to, I think is the most important, is the actual loan balance. So the actual outstanding balance, principal balance is 1.5 that's in the portfolio right now. That is a important number there because that is the number that is used when you use a lot of the federal funds. So for example, the delinquency is calculated on the percent of the outstanding balance. And then of course, it nets down to the 194 jobs. So we tried to do that to give a little bit of clarity on the jobs. This column right here is one we will probably still have to improve upon a little bit. This is the loan fund overview. But I want to point out that although we have included these numbers here, we're not the custodian of the loan fund. So we're not managing these dollars here. While they are accurate, I did want to point that out that we don't actually keep up with the actual custodial point. So
Can I just interrupt for 1 second? So I'll
Sure.
get you those updated numbers. The
Sure.
city and county no longer have funds in that. They both repaid their loans, so the total is actually lower. And I never got from the operating committee the minutes showing the last losses approved. So now that they were just approved, I now have those. So I'll process those today. So I will get updated numbers out for that afterwards. I think that I'd shown updated numbers before with the city and county money out of there, but once we process those losses, I'll get you updated numbers.
okay, fair enough. Thank you. So TerraPlane, this is like a general idea here, but we'll get that out to you to get they do it. And of course, the reason that we have that there is to show the percentage that is out. Of course, you can't be over 100% right now or 50%. So the next column, some of it is a little repetitive from the first column up here, or the first block up here, the portfolio review. And so we did this right here to give a little bit more clarity because there's been a lot of questions. And I think one of the things that's been hard for the committee to understand is the reporting on the actual loans itself, and what is considered an active loan and what is not considered an active loan. And then what I think confuses it a little more is for the operating agreement, if we file a claim, we're required to show the committee that we've actually charged off that in our system here at Mount Bisworks. When we charge that off in our system here at Mount Bisworks, it comes out of our portfolio, but it still remains in the portfolio for NCCF, and it still remains in that portfolio, even though we considered it a charge off, because those funds have not yet been paid on and guaranteed. So those are funds that still should be kept in outstanding balancing. So I do, if you have questions on that, please let me know. But I think that's been causing some confusion there. So we broke it down again, 80 loans since the beginning of the portfolio. Right now we have active loans, and I put next active performing loans, which means those are in the loans on the other tab where you have the actual NCCF loan list there. Those are the ones that are paying. That we're not having any problems with them. Those will include the delinquency in there, but it doesn't include, any that were following claims on, that were having a status. So I broke that down below. Because again, I think what the committees also wanted clarity on is how do you know what's coming down the pipeline? You don't be surprised and just have a claim of this sudden. And so I've listed this out. Right now, we have one claim that is pending. That claim is actually something I think we're going to address in the agenda here in a few minutes. That is the one claim that we did present last month. It was not approved. And it was not approved because I think the question was around if we can charge the legal fees on that. And so I left that in actual claims pending, even though I've already presented it because it wasn't approved. Active loans claims approved and not yet paid. I have left those in the active because we've not yet received the money from NCCF, and those are 6 loans, and they were approved, I think, in the months of October and December. And I think there is still confusion in how that process flows with the committee to get the information over here, and so she can process those claims. So I think we've got that figured out now. So you'll see those drop off next month, hopefully, and then hopefully we won't really see those that will be able to process things within the same month. So communicated for post problems. And so again, this comes down to the 12 claims that are paid there. I wanted to explain that because one of the questions has been, well, why is there only 12 claims that have filed when there's been more that are approved? It's simply because we're not been paid for it. Again, the loans that paid, we've broken it down here. The loans that are financed and restructured is here on this line. And then I put in here a new category of active loans and labeled it claims on hold. And I want to explain what I mean by that is there could be a situation, for example, a couple of the loans that I had presented last month in where we had determined they were not going to pay and we charged them off, but we were still trying to collect on those. So, in one situation, one example, we did go through the court system, we did obtain a judgment. The other one, we made attempts to try to repossess the collateral, engaged with the collection company to find the collateral. So in situations like that, we're going to say that they're still active loans in the portfolio because they've not been paid out, but I'm putting the claim on hold because I don't want to bring the claim to the committee and not be able to answer questions because the operating agreement is before we bring any claim that we have to liquidate any assets that are available and exhaust all the resources from this collections there. And the last thing to point out, with this category, we had put in here the demographics over here on the right hand side and broke it down as far as jobs, so that would be probably a little bit more clarity. Yeah. So I want to pause just a second. Does anybody have any questions?
Couple of them. And it references the claims on hold and the reason why they're on hold. You mentioned that the operating agreement stipulates that the assets have to be dissolved before they're brought to us in an attempt to. Most of these people, they don't have assets, do they? When I guess I would have to take a look at the balance sheet to see, but I guess what I'm alluding to is I'd like to have more real-time information. I know that there's a sort of a 60-day lag, and I guess from a governance standpoint, I kind of like to have that information if we could. I don't know if that's possible, but I guess it just goes to the very long timeline, the lag in which we get, information. And I kind of would want to do something about it if we could. I don't know if it's feasible, possible, or from a pragmatic standpoint, we could. But, on the other end of the loans are individuals. I guess it's what I'm alluding to. And I'd like to see them, if we could, if there was something we could do as a committee. I know we're not structured to be on boots on the ground like you guys probably are, but certainly I see a pattern here, and I'd like to disrupt that pattern of primarily African-American owned firms who are almost, from where I sit right now, about 80% in default of whatever claims that we have. I'm just wondering, that's all I'm asking is if there's something that we can do to, whether it's information coming forward, in a more timely fashion, that we could head this off, because I like to fix stuff. I just don't like to see it keep going on and on. Thanks.
Yeah, no, I think that's a fair question, and, to answer the first question, it's something I think it comes up every month is the timing, the data that, that we present, and we're still, as far as the data that we present in the industry, it's always presented at end of month cutoff, and, if you recall, I think that's why last month we considered moving the meeting later in the month, to try to give more accurate data, regardless of how we do it. The only data that we can really present that's going to have be on the actual report will be at the end of the month cutoff. Now, what we can do, I think, as far as your question, Chris, probably give me 1 second. I see your hand there. As far as the reporting on the claims hold, if that's a concern, right now we don't have any. It's zero. So I'm not holding anything that, that we need to report on. But for example, if I had one that's on there too, I would easily be able on a monthly basis when I come to this line right here and I'm talking about this, I would easily be able to say I have one claim that I'm currently trying to work with, the non-responsive, and we've had to go to the legal route. We only do that if we've exhausted everything as far as trying to provide coaching or whatever. So if it gets to that point and that's what's going on, I would be able to give some updates at that point. I wouldn't have time to, find details on it because it's still happening on a daily basis. We don't know how it's going to resolve. For example, I did have one on there that was on the back sheet for a very long time, and I had it on hold. That client was able to work something out, and he was able to actually pay the money. So that, was a success there. Christopher?
I just wanted to one thing. There was one that I saw that had been in delinquency almost 2 months after he got the money, and it was from 2023. That's really what. That's it. Thanks.
Kelly, just on this model here, I think it might be something worth, whether we want to put it in the model or not, or the data. So the original principal balance that's been loaned from the fund is $3,167,762.48. That's correct?
Yeah.
And the current principal balance now is it 1,383,000 or 1 million? What's the actual principal balance with the new loans we just did in the fund?
The principal
What?
balance right now.
1,579,000.
Yes.
Okay, 50.15. So, and then that's one. So, all right, and then I'm just going to just do this real quick. 1, 2, 3, 6. Oops. 4. So if I take out the charge-offs or the claims that have been paid and add in Mountain Bizworks portion, I get that $1,252,602 of principal has been repaid on the loans since inception. If the balance, if I take out I just want to make the point is that we can look at this and, focus on what's been charged off, but roughly 4 times as much has been repaid on the loans has been charged off since inception. I just think that may be a data point that we ought to capture in this.
Yeah, we can do that.
So anyways, it is something I was looking at this and again, I think we Carl has often felt like sometimes we focus on the downside of things, but it just occurred to me that, anyways, so
think that's a
Okay.
great point, Christopher. It is, yeah, tracking the number, but also the amount that has been repaid, will help to kind of round out the whole story. And then it will kind of tee us into, an item that we're not launching today because Carl's, not here, but talking about, celebrating the wins and the successes that we have. So, yeah, I
Yep.
think that would be great. And we're gonna hear, an update later in the meeting about the custodian process. And so, but as we're kind of working towards that, getting that picture would be super helpful.
Great. Thank you. Thank you, Kelly.
Sure.
Mhm.
And that's what, that's one of the things that I should have said at the beginning is that, with this being a rough draft, we welcome any comments, anything that, we can do this will make it clearer. So please, speak up, any suggestions, we just appreciate it.
Mhm.
Any other
Well, I
questions
just
on
wanna-
this?
Yeah, I just want to thank you all and John for your work and collaboration on this. To me, it feels, like this is a really great and approachable way to kind of look at a lot of information, at one time. Um, I, I don't think we need to take an official vote on this. I don't, unless Kelly, that would give you, the confidence to proceed, but, if we can kind of go around and hear some general support or to move forward with this format, or if you strongly oppose moving forward with this format, let us know.
I like the format. I think it's clear.
Great, thanks, Frank.
If you don't mind, let me scroll down just to the rest of it so you make sure you see the whole thing. And then, yeah, what I might ask would be is that, I mean, I don't know if you need to take a vote. That's not my call there, obviously. The only thing we ask is be as transparent. Anything that you think would help, please let us know so we can put this in here. And then from there, again, what our plan is. Internally, we'll get it to where it's pulling from the NCCF report, from the system automatically to ensure that it is, correct. And there'll be a few months of closely monitoring it to where I do plan on, providing the original one that we had to compare them to make sure there's no errors so that we have a very smooth transition to where we know that it's accurate. So as far as delinquency, I do think this is more clear as far as the delinquency. It shows the categories up here, the demographics up here, and the totals. The good thing is the delinquency, we have been able to work with several ones that were past due and able to get them called back up. Of course, we did have some that were charged off with the claims. But as far as the trend, I do see things are improving with that. So right now we have 3 that are delinquent. Those categories are the greater than 30 but less than 60. And 2 of those I do feel like we'll be able to something like those. So it brings it to the 4.16 on the delinquency. And then the last 2 columns, the charge off and claim status, we wanted to put this in here to be, I guess, kind of transparent to show what is actually being charged off, break it down. And the question here last month was, it has been around the trigger point with 20%. And there's been like confusion as far as the calculation. And so I put 2 numbers in here. If you recall last month, we were, I think, over 5% in December. And the simplest way to explain how the charge-off trigger is calculated, it's based on the numbers since the inception of the program. And so the program came about just 7 years ago. And so the way it's calculated, last year was based on 6 years, and so, you would see that the number was higher. And if you recall last month, I said, once we go into January, we will see a decrease because you're going to have 7 as the variable there, because it turns into the 7th year. One thing I did look at, I actually mentioned it to John, and then Chris Green will chime in on this one too, but I think what we have been doing, we're calculating it on the actual loan balance, the outstanding principal balance. I think it's reasonable, since we're looking at inception, to calculate it on the actual balances, since inception. It's not a large difference, but if we did do it that way, 3.47. If we don't, it's 4.18, and you'll have that variable. This stays the same through the year. So I'm bringing that out there. We can do, whatever you all want us to do. I just wanted to be I would like there to be a trigger point that is understandable and tells the story, provides information. So, any comments or suggestions there, questions, I'm happy to listen. Do you think we ought to leave it at the 4.8, or the way you're calculating now, or make the change, or does it matter either thing?
I think probably leaving it at the 4.8 for now is erring on the side of caution. And then maybe we can, in the, upcoming meetings, have a little bit more of a deep dive discussion about how we're looking at how each of these trigger points are calculated. So I agree, like having clarity and a shared definition of how they're calculated will help us all be on the same page, and that's something that we could, write down and kind of keep those definitions consistent.
Okay.
If
The one thing,
if we had, go ahead, go ahead.
no, go ahead, Dee.
I was just thinking from a business standpoint, most banks or lenders are pretty cautious and they keep it at a certain level. The only thing that would warrant it going up is that there were more funds in the pool. You have to predicate it upon something. Usually it's very conservative as a percentage of to preserve the funds. But the only way that most banks or lenders is that the entire pool is made larger. So that's all that I would interject. It can't be a quixotic or haphazard or that sort of thing. We always try to preserve. That's our job. Thanks.
Yeah, no, I understand. Yeah, what I was going to say, the thought just came to me is I think one of the things that I may want to look to do is on several of these categories, add for more at the previous month. So for example, up here at the top, I think it's helpful to show, we're 77, we did 3 and we're at 8 now. But I think if we do that on delinquency, then we can show you previous month what we were, if we were at like 4 accounts and now we're at 3 or 43 and we go up, and then what the balances are and the percentage. I think that if we can do that, I think we can, as far as pulling it over from the templates, I think I will check into that, because I think that would be meaningful, because you can see where we work with them up and down on a basis.
You've got, it seems 3 of those. I'm sorry to interject. You've got 3 that are past due more than 30 days. Is that correct right now? Do you have, you probably have more access to more timely information.
Mhm.
Have some of these have they been brought current as of February, or are they still broaching towards delinquency? Do you know? Do you have that kind of information, timely information?
I do. Sorry, I'm kind of pulling up here. I know one of them, we had scheduled to make a payment on it. I'm not sure if he's paid yet. I think it drafted on the the first of February. Um, it could be, it could still pass because we're on the 6th of the month, and that's one of the reasons, we're hesitant to say for sure. Go ahead, Christopher.
Isn't part of the discussion this morning about the timing of this meeting going forward? Is that on the
Sorry, what was your
agenda?
Yes, our calendar schedule is there. I think it's the last item. But
Well, I guess
ahead.
what I was going to say is that I think we need to stay to commenting on the report as Kelly's prepared it. And I just want to say that because I think once we start trying to comment on stuff, so I think that's what we're trying to work where, we have the month-end report, where we're in that, for the previous month, where we're in the following month, not the second month. So if I kindly just ask that we stay to commenting what's on the report.
Yeah, but the only thing is that we are a committee that is here to govern and to try to, and we have that right to ask questions. We can't be limited by parameters. We were appointed by elected officials.
Right.
And it is not, when we have a question, and it all comes down to timeliness and what is in the pipeline, respectfully. I would say that to you. That is our job.
And
Right,
and
right.
if I can hop in real quick, in some of the conversations between our last meeting and then in doing some agenda prep with Carl for this meeting, I think that a tool like a spreadsheet can only do so much and it can only share so much information. And so this is a really great update to that. And then, what we can think about is, I think, trying to get an understanding of that pipeline and getting a sense of, red, yellow, green, like what's the risk of us kind of seeing these three coming in the next, several months or something. So, but I don't think that we necessarily need to try to capture that in a spreadsheet. Those are some of those conversations that, we've been having with you all, and Lucius has provided a lot of great information, around context of the program and support there. So I think that we can probably get at those conversations and discussions in a different way than probably just looking at the spreadsheet. Mason, I see your hand is up.
I agree. I think this conversation has walked around where my mind has gone. I like the look of this spreadsheet. It feels like it is definitely progress in a more clear and accessible snapshot for the monthly discussion. To your point, I think some things that I've heard from Carl is the next phase of the iteration is more readily accessible trending, kind of more like a time analysis. And I think that speaks to kind of what Dee is looking for too. So I think that's a tool that will be easier to build based on what we're seeing here today. So to me, this feels like a step in the right direction. I do want to spend more time with it and would like to make sure I'm comfortable tying what is effectively on the summary tab to the details. Would like to tie all of the pieces. And I think that obviously exists, but I don't know that I could readily say that loans that are active, but with claims approved, not yet paid. Could I jump to those 6 very quickly on the next page? And maybe the answer is yes. But I feel like that's a question I hear from John regularly too, is making sure that there's a very clear connection between the detail that underlies the summary. But overall, I like this spreadsheet, and I think that plus some kind of development of built-in scenario analysis helps us reevaluate the trigger points to the discussion today. But I also think we're thinking about not just things to drive away from, but things to drive toward. So this different look, I think, is a step in building out some additional tools and views.
Yeah, that's great. Any other heartburn questions, comments, concerns for Kelly or Christopher? We can put some of these things in, I think, yeah, Mason, you put it well, working towards and looking ahead items. So, I wanna give us time here if we need more time, but I also wanna keep us moving along because we've got some other items. Let's, for Kelly, next steps. Is everyone generally, okay with this version of the report and we're good to move forward with that? Hearing yeses in this room and seeing some nods online. Okay, great. So we've got consensus amongst all the members. We're not gonna take an official vote because Charlie kindly reminded me that that was not noticed, and as it's, gotta vote on the things we're allowed to vote on. But Kelly, you've got consensus across the board to move forward with this.
Okay.
Template.
Okay, yeah.
That would you-
Okay, well, yeah, what our biggest thing is we just wanna, it's gonna be time consuming for us to go and have them rebuild the thing, and so we just wanted to do it, one time and move forward with it. But I do wanna clarify, as far as, the recurring question as far as the timing of the data, to Christopher's point, as far as the reports that we provide, the only data that we can provide officially is going to be at the end of the month cutoff. And I certainly understand, I certainly respect the fact if you see something on here, for example, the less than 30 or greater than 6, that you're wanting to know what's going on with those 3 that were delinquent as far as the end of the month in December, because we're on the 6th of February. And what I need everybody to understand is we still work those accounts every day. We're working with the accounts, we're providing them coaching, we're doing everything that we can possibly do to get them off the delinquency so they're successful. If they don't, you'll start seeing them reported monthly where they go from 30 to 60, to 90. All of this data is pulled from the MCCF loan tab, which is a list of all the loans in there. So all this data, you can go over to the MCCF loan tab there, and you can see which ones are on delinquencies. And you'll have the one that's previous month, and you can see the ones that are there. The reason that I say that is we want to provide as accurate data as possible for you guys to be able to analyze and move forward with. But I'm also kind of sensing we're getting questions as this is maybe the first phase, and then we're going to do a second phase. So I just want to be clear. It's not that we don't want to provide the data, but we're limited on what we can do. And a lot of times, for example, if I'm commenting on one right now that's in less than 30, things change. And if we could have something set up, for next Friday to pay, and if I'm telling you this Friday they're going to pay, I could get notice next week that they filed bankruptcy or something. So when you're still working accounts, things are still fluid. So I just wanted to, kind of mention that. It's not that we're not wanting to provide information. It's just we've got to be as accurate as we can.
Thank you, Kelly. And I think part of where the conversations are moving towards is how can we kind of set all of us up to be on the same page and kind of have shared understandings of information so that we can kind of have that longer view. So that way, there's a bit of kind of balance and resilience and understanding, like, yes, we're voting on the schedule again because schedules are tricky, and we're just going to have to kind of accept some amount of pros and cons with data and timing. And so how can we, I think taking all of the pieces together, we're going to continue to have conversations about how can we give ourselves the information and tools to kind of work around that. So that way we're kind of understanding as a committee, what are the, yellow flags that we're waving here and keeping an eye on. And, a perennial challenge of this committee all the way around, whether it's claims or new loans or anything, is it is a day-to-day business that you all are in. And this is a committee that even if we met more frequently, it still wouldn't solve the, getting a phone call tomorrow kind of an issue. So So we'll continue to kind of keep some of those pieces in mind and look ahead. If y'all are good with that, we're gonna move on to new business. We have a claim from our last meeting. As you all recall, part of the conversation and why we pushed it to this meeting was around the legal fees, I believe, around cost recovery for the claim. I'm probably misstating that a little bit, but we looked at the operating committee agreement, and on page 9 of that agreement, legal fees were an eligible cost for recovery. There might be some different kind of conversations around tolerance for how much eligible cost, but it is an allowable cost per the agreement. So with that, I'll open it up to, well, I guess I think process-wise, I should probably get a motion to approve or deny the claim first, and then we can open it up for discussion.
I'll move to approve that claim, right?
Okay. Okay, great. So we've got a motion and a second. I'll open it up for discussion. Any comments, questions, concerns around this claim?
The only concern that I have are the legal fees. I think the loan was like $10,000 and it spent $8,000 in legal fees. So that does not make sense to me from a business perspective. I think we may need to look at some policy caps in the operating agreement and changing that at some other point, not in this meeting, but that does not comport. That is just not reasonable. Thank you.
I agree. I mean, I think the context, just working with outside attorneys, it is a little hard to predict what your outside attorney costs are going to end up being. But I think we did have discussion, and I thought it was fruitful about Mountain BizWorks advising the committee if they will be pursuing a legal process. And then there might, in the future, just be some discussion of how much is the claim, and do we think it's worth it to pursue? And $8,000 in legal fees for a $50,000 potential return is different than $8,000 for $10,000. So I do think that the ratio feels a little shocking, but it's allowable and it happened, and we can have further discussion in the future.
I would just add that I feel like there needs to be a trigger point, like a 25%, 30%, 40%, some number in there that Mountain BizWorks come back and basically, then we can agree that we're going to pay the extra to go get it or not. To be confronted with basically 100%, almost, what is it, 80% fee for a loan for 10,000, it just seems absolutely ridiculous. I don't know why we pursued it, frankly. So, but if it's in the documents, but it's, ridiculous.
Christopher?
Yeah, what I suggest is, and I think Kelly and I mentioned it last time, again, I want to defer to Matt Raker, but what I would suggest is we have one where we reach to the point where we want to pursue collections, legal, whatever. We come to you and say, hey, here's the situation, and y'all can say pursue it or not. But I think we got to be very careful that we try to artificially put a percentage on it at that point, because there are certain points where, like you said, you can't control necessarily the pathway to a certain degree, but I think having your consent on the front end, because you may decide, hey, given this cost and this type of recovery, we don't want to pursue it. I mean, Kelly, what do you think? I mean, that to me might be helpful. I agree. The legal fees on this one vis-a-vis the loan amount is out of whack. So not disputing that.
Yeah, I think that's reasonable. I think it's a responsible thing, and I think we can implement more of a process to where, when I present the monthly reports and when I'm reviewing delinquency, report the ones, if I have one that we feel, to this point, what stage are they? If they're on hold, are they on hold because we're going to work something out with them and get repaid? Or are they on hold because we're trying to pick up collateral or litigate? I think the responsible thing to do is moving forward, go in, when we're talking about delinquency, I can go in that to a little bit deeper and explain, we've got, you know, two on there, one I think may pay, but this other one, we feel like the other option, we've exhausted everything with the exception of legal, and that we want to take it legal, and then be prepared to give a scenario of why we would want to take it. I have no problem with that. I think it's a responsible thing to do.
I agree. There needs to be some more discussion and communication. I think we're more efficient if we can automate the decision points as much as possible. To John's point, I think this is a new phase of the discussion for us and in the maturity of the fund. I feel like we kind of need some more context. And so maybe that's one-offs for a while, but I feel like we do have to work towards something that is a standard. So it doesn't have to become another extended conversation that's included in guarantee consideration, claim consideration, sub conversation for additional fees consideration. Can we template or automate this decision point, understanding it's something we're going to be dealing with more in the life of this fund.
Yeah, I agree. I don't think we want to slow you guys down to come and get approval to go pursue legal route to get a claim. That just seems so bureaucratic and slow. I think we just need some trigger point to say, hey, this is how much we've already spent on this. Do we want to keep going?
I think my recommendation would be when I go over the reports every month, when they move through the different categories, you know, if they're between 30 and 60 or 60 to 90, then we have a trigger point when it reaches a certain stage in there. A decision needs to be made, and we can report to at that point what's going to happen with that. That way there's a trigger point when account reaches a certain delinquency status. Here's what we're proposing to do. And then that way it's always communicated. I have no problem with that. I think that's good.
So how about this? I think, Mason, a little bit to your point, sometimes we're probably trying to work through like functional process pieces as we're presented with examples to kind of talk about this. So does this sound like a good approach to kind of deal with this question? If we work with lenders and members kind of offline to develop some options for the committee to consider regarding a trigger point or, you know, kind of conversations, and we can kind of bring that to the committee for consideration, you know, next month, or if it, you know, hopefully next month. And so that way we can kind of start to get some structure and foundation around this. Does that seem like a good plan? Okay, great. So we'll do that. We'll get some options together for consideration. So just hearing from today, we had a little bit of discussion around a percentage, had a little bit of discussion around, you know, some front end awareness and approval, and how to kind of do this without making it really slow or overly bureaucratic. So we'll be in touch with folks over the next few weeks to kind of think through that and tee that up for conversation next month. That piece of it aside, how do folks feel about moving forward with the vote for right now? Does anyone have any specific questions or comments about this particular claim?
No.
Okay. So with that, we've had a motion and a second. All in favor of approving this claim, please say aye or raise your hand.
Aye.
Okay, all opposed? Any opposed? Okay, so it passes unanimously. Thank you all. I'm just gonna make a note here. As I'm cleaning up my notes, our next item on the agenda is a new loan for consideration. So Kelly, if you wanna get us teed up for that conversation, that'd be great. And let me know if you need me to share any material on my screen.
No, I've got it, but Chris was going to be the one to. I assume Chris was.
Okay, yeah, we have a guarantee request, for a startup business that's in the outdoor industry. It's a rental business. It's a mission fit, particularly because of the low net worth of the borrower, a fit for this fund. The operation area will be City of Asheville base, but Buncombe County, and, probably will be serving, well, his clients will be invariably in the national forest to some degree. So it might, go out of the Buncombe County in terms of his business, but it's based here. Again, it's a startup. So clearly less than 1 year. The $65,000 request, there's a breakout of the use of funds. He's had a good bit of coaching, one-on-one coaching. So keep scrolling, Kelly. Our collateral will be the equipment plus vehicle. It was structured over a 7-year note. He's got very good credit. Let's see. That's the guarantee amount of 55,000. Again, I just focused in terms of the break-even point, and ultimately, when it comes to startups, this is a lot of ways what we kind of focus on. You can project, revenue and debt coverage ratios to you want all day long, but ultimately it comes down to how reasonable is it to get to break even. And in this case, it's not a huge hurdle. It's low overhead. So that's where we felt comfortable that it was a reasonable loan to make, with to a talented person who knows the industry very well, and has proven to be very teachable. So I think there might be. Is there anything below that, Kelly, in terms of? There might be a little graphic snapshot, looks like, in terms of revenue. Again, he's got a high contribution margin because of low overhead. So you see what his average rental ticket is, and that translates into around 150,000 in revenue to break even. So not a huge number to hit in this case for this business. Yeah. So I guess open up to any questions.
I have a couple, Christopher. His break-even point is yearly is 149,000, a little bit more than that. Is that right?
That's right, 149.
Okay. Then one ticket or whatever is $105 per unit. Is that right? Okay. When you did your performance, did you inject seasonality into that?
We do, yes, we do.
And so basically your performance do have seasonality. That's really what my question was, because it's a seasonal business.
Yeah, it's a great question. We deal with seasonality quite a bit, obviously, in our market, and so we look at that. But in this case, this is just an annualized average. But yes, you would see a cash flow model that would show variation in monthly cash flow. It's a business that will probably actually lose money in January, February, kind of months. So
Did
yes.
you budget reserves in there as well? I do apologize.
Yeah, we
For that
do. We get,
seasonality.
he has around 30,000 in working capital that we put into the loan, and which equates to around three months of overhead. So
Okay. All right, thanks.
John, I saw you were off mute. Did you have any questions or comments?
All right, question to me?
Oh, just, I thought you had come off mute, so I didn't know if you.
No, I'm fine. I would ask that one of my prior meetings that, no, we haven't approved, but can we get the loan number on this summary and somehow get the summary so that down the road, if something happens, we can tie back to the summary more easily?
Yes, I do remember you asking for that, John. So forgive me for not.
No, it's fine. I'm
I
assuming you don't
created
have a
this
loan
and I
number
should-
to associate with it right now, but at some point, so we close the circle so that when we look at the spreadsheet and if it underperforms, we can go back and look at what we presented and see
Yeah.
what the issues were.
It's a good note for staff. Thank you, John. Christopher, just a trend that we've had with some of the businesses before, I just wanted to note that it is a vehicle, and that has tended to be something that it's hard to recover if things do go south. I was wondering if you could tell us a little bit about that cost for the business. And then I'm also curious, if you can share a little more, not to disclose what the business is, but is this water and kayaking based? Is this like a hiking tour?
No,
Um,
it's terra firma. So it's a land-based business. Yeah, the equipment would not perform very well on water. So the collateral here is both, there is a vehicle. We actually have really good track record vis-a-vis vehicle recovery. The issue is that most of them are heavily depreciated, and so in this case, the bulk of this collateral will depreciate. If you were looking at his balance sheet, you'll probably depreciate almost all of it in the first year. So from a book value standpoint, it's going to show zero at the end of the first year. Now, the recoverable value will I don't know. I don't know. I'm not going to think that there's going to, if this were to go into default, that there would be, our recovery is not going to be 48,000. So keep, but that's the value at inception. I think if I were looking at this and providing a discount recovery, you might get 25 cents on the dollar at some point. So, so what was the other question you asked? Forgive me.
You covered it. The second question you got at the front end, which was just what kind of outdoor recreation.
Oh, yeah.
business.
Okay. Yeah.
And my question is sort of adjacent to that. And I don't know if Christopher, this is for you or more for Lucius, but obviously we've, this tourism, I imagine like rentals like this may capture some of the local market, but tourism and the outdoor economy is
Right.
something that is great when it's great here, and it's high risk, in terms of an industry when we've got impacts like we've seen in the last little bit. So how is that factoring into y'all sort of decision making in this recommendation, I guess?
Well, his bulk, we modeled this one more heavily toward tourism. I think that, but with like a lot of startups, you don't know necessarily, you kind of have to pivot. It's a dynamic business plan, not a static one. But we clearly think that his model, as he's starting it out, will serve, non-locals predominantly. Which to your point, obviously the last year has proven to be, well, what we hope is an outlier. So, so that, and if he's got a good strategy, I think he's got a unique value proposition. And I think he's also got the ability to pivot pretty easily because it's nimble at this point. So, but I'll defer to Lucius if he wants to comment more about tourism in the broader market conditions because of his position, on the tourism board. So Lucius, to you.
Yeah, I think when you're dealing with tourism, it's not as simple as just, is your market tourist driven? There's several different types of markets. This is the type of business that can be a combination. So it's not necessarily that a local will, be the one who's taking on the service, but oftentimes people have family that are coming into town and things that happen, and so there is a symmetry in terms of it having a local impact more so than other businesses would. There's some businesses where it literally is just locals that, or excuse me, just tourists that would be a part of it. This one, though, yes, definitely tourist driven. It can be also affected by local markets. I will also say, because of the nature of this business, it is not one that was as heavily impacted from a natural perspective as others. So this is an industry that is still growing to a certain extent, if not as fast as it was growing before. So I think you're always going to take risk in a new business. I also think it's a factor that there isn't another business of this exact type. And so there's also not a lot of competition where there's other industry sets within tourism where there is a tremendous amount of competition.
Okay, that's helpful context. And I guess more, love our outdoor recreation, outdoor economy industry. And I think I'll put it in my parking lot, but just kind of wondering around, what does sort of support and maybe disaster preparedness, resiliency planning look like for businesses that are sort of subject to this. So I'll put that there. I know John mentioned that he needed to hop at 10:30. So any other questions around this?
Maybe a quick question. I don't want to dwell, but my mind went to the same place as Dee's, the seasonality. And so he started last year, not a full year, but there is some performance. And so we've annualized the break even. What does annualized actual performance look like for the time that he has?
Yeah, he's not open. He hadn't started.
Okay.
Yeah, no, he formed his company, his LLC, at the end of last year in December. So, but he's pre-revenue. Yeah, forgive me if that was confusing. Yeah, so his annual, so that's his break-even point from a annualized basis. But he doesn't have any revenue for me to kind of give you, Mason, and give you some type of run rate on revenue. So,
Is there any sense of the likelihood of his performance against if the daily break even is 4 tickets? What is the sense of capacity and likelihood of, because doing quick math looks like he needs to operate 350 days out of 365 to meet the break even at 4.
Well, he has the ability to, so basically that represents a 33% utilization of his break even. Assumes he's at 33% capacity in terms of the product that or the service he's providing. So it did give you, and of course, there's some variability around that depending upon, because he has 2 different levels of service or product, you could say, that, can factor into whether that break even actually goes up or down slightly depending upon, but he only has to deploy his service 1/3 of the time. So, if you were to oversimplify Mason, he would need to be providing rentals. What's a third of 365? 100 and.
Thank you. That answered my question, and I think I interrupted somebody. Thank you.
I was just saying the additional conversation about like the industry and in your question, Mason, about the utilization. I think that's really helpful in understanding. That sounds reasonable to me of anticipating 1/3 capacity of planning. So I think that's really helpful conversation. Thank you, Christopher.
Yep, no, it's a good question, Mason. I mean, that again, this discussion is where a lot of times we try to zero in on is you know, how much of a climb is it to break even? And, you know, because, you know, to positive cash flow basically. And, so, in this case, we felt comfortable with that. So.
Well, is there a motion to approve this loan?
So moved.
Okay, I'll take a second. Okay. Great. All in favor? Any opposed? All right, so that one is approved unanimously. Thank you all. And so we will move on to our next item, which is an update on the custodian procurement process from E EB.
Yeah, we have been working on a few items over the last year to try and make working with us a little easier. And so it was actually mentioned earlier by Karen. One of those actions was to repay or seek repayment from both the city and the county on the loans that were made as seed funding for Mountain Community Capital Fund a few years ago. That just helps with seeking a new custodian by not having to include all the things you include in the document when you have government direct funds involved. So that simplification, we're working on reflecting in an RFP again for custodian, which we can put out. That's one of the goals we have on deck for next week. And so we'll be sharing that around with the goal of finally getting self-help out as our custodian and getting someone new in. But appreciate everyone's help with getting us there, making it a little more simple to work with us. And hopefully we'll have some good news by the next meeting. So we got any questions on custodian? It's really Mason's thing, so Mason, anything to add?
That's okay.
Yeah, I think we've been kind of in a research phase as a local government fiscal officer. We're trained to kind of operate in a very strict space, and we have confirmed that we are released from that in a lot of ways. And so the funds kind of dollars are now its own, and I think that gives us a lot of flexibility. And so it's going to be, I think, a pretty wide open RFP that allows us some flexibility to negotiate in the best interest of the fund. So it's kind of an exciting step.
Well, thank you all. Well, we will move on to our next item, which is we need to elect a new vice chair. And so or appoint a new vice chair. I will make a motion to nominate. I don't know if I'm doing this the right way for Robert's rules. I'm going to nominate Mason. I think that's the way. And is there a motion to vote for Mason as the vice chair?
motion.
Okay.
I'll
I'll
second it.
second.
Okay.
Somebody
All
else
in
can have a
favor?
second.
Any opposed? Okay, you're voting, Frank. Or last.
I was
minute
voting in
opposing.
favor. I was voting in favor. I was a
Okay.
little late there, sorry.
All good. So we've voted unanimously to approve Mason as the new vice chair. Welcome into your new role. So glad to have you there.
Thank you so much. And in full disclosure, I know I've spoken to several of you, but I'm about to make a run for it for paternity leave. So now that I'm vice chair, I will mix the next 2 or 3 meetings. But I'm excited to come back and get back into it in a real way.
Congratulations.
Thank you.
Congratulations.
counts.
Yeah. Kidding. Wonderful. Okay, so up next we have our approval of the 2026 meeting schedule. So Charlie, that is you. Do you want to talk to us about that? Or Rennie's not? And yeah, and so the preference, Carl was just to revert back to the first of the month meeting. It, I think based on our last conversation around the meeting schedule, it was sort of challenging to find another either Thursday or Friday of the month that worked consistently for schedules and measurably improved the data timing question. So that's sort of the context and the preference, I guess, to move back to that first Friday of the month. But if there are other suggestions or preferences, we can certainly talk about that now.
Make a
Okay,
motion, Rachel.
Okay, I'm gonna make a motion to have our regular meeting scheduled to be on the first Friday of the month in person at City Hall from 9 to 11-ish. Can we get a second? In the sixth floor training room. Okay, I think I've said all the pieces that I need to say. Is there a second?
second that
Okay,
motion.
great. All in favor? Okay, any opposed? Okay, well, that motion passes, for this committee, FYI. For parking, it's still a little bit of a walk, but Stevens Lee is, across the street and there's sort of a elevated walkway over, Charlotte Street, I believe. So that's a place where you all can park for free when you come to these meetings. Great, well, we don't have any other items. I guess, Charlie, is there anyone in the call for public comment? And I guess maybe before that, Karen? Your hand is up.
Yeah, just when you approve a claim, if someone could remember to please send me the minutes from the operating committee approval, because we can't process that claim until we have that, and we never got that for this past round. And I may not, like, especially if meetings are in person, I'm probably not gonna be able to be there, so it's really important for you to send me those minutes. Thanks.
Great. That's making a note of that now. Great. All right, Charlie, is there any public comment? Great. Okay, can we get with that, we're done. Can we get a motion to adjourn?
Motion. Second.
Okay. Second, all in favor? Woo, opposed? Okay, great. Thanks so much. And John, I got your note. Yes, we will make sure to update the names and roles. I think Carl had some feedback around the format, so we'll get all of that updated ahead of March meeting.
Thank you.
All right, thanks so much, y'all. Take care.
Thanks, y'all.
Have a great weekend. Take care.